It is 5 a.m. at CNBC Global Headquarters, and here are your top 5 at 5. Google delivers a blowout quarter. The big numbers behind Google's big win. That beat helping propel the tech sector to new record highs. But could the big pile into tech be a big risk to you and your money? We'll debate it. What trade war? What China's markets seem to do that says maybe they're not that worried after all. A gold alert. Something just happened to the yellow metal that could be a big red flag for the gold bulls out there. And from gold to Goldfish, the big recall you need to know about. It is Tuesday, July 24th, and Worldwide Exchange begins right now.
Let's get it started. Ha! Let's get it started in here. Let's get it started. Ha! Let's get it started.
All right, good morning, good afternoon, or good evening, and welcome from wherever in the world that you may be watching. I am Brian Sullivan. So glad you joined us here on Worldwide Exchange. Here's how your money in the markets look on another rainy Tuesday in the Northeast. It is not that overcast in the markets, however. Futures are slightly higher. The Dow futures indicating a jump of about 86 points now at the open. You see the S&P as well, and the NASDAQ futures up about 55 points right now. And all of this may be related to your top story, which is this: Alphabet's blowout quarter. Google posting massive numbers last night. Revenue of more than $26 billion coming in ahead of most estimates. The ad business jumped 24% and shares soared higher after hours, up 4% and extended to $12.6150. By the way, if you're counting at home, Google is now closing in on a $1 trillion valuation. Joining us now on the CNBC Newsline is Victor Anthony. He is a Google analyst at Aegis Capital. Victor, how big was Alphabet's quarter?
It was big. I mean, revenues came in 5% ahead of our expectations. EPS was about $2 above. Operating margins was above our expectations, improved about 165 basis points sequentially. And, to your point, and this is quite superficially, though, I do think that Google is and Alphabet is very much in the race to achieve the $1 trillion valuation. So, I had essentially counted them out and saw that Apple and Amazon was in essentially a two-man race. But I think these results put Google back into that race. Very, very strong ad momentum, margins coming in better than expectations as traffic acquisition growth pressures ease.
Yeah, costs were down, traffic, everything was up, revenue was up, earnings were up, the ad business was up. Is there any at all holes to poke in the quarter, Victor?
Well, I think the bears on the stock is still point to the fact that you do have operating margins still declined about 200 basis points on a year-over-year basis. So there's still some sort of margin pressure on the business as they continue to invest in a lot of their growthy areas like the cloud, hardware, as well as traffic acquisition costs. Even though the pressure's eased, it's still on a absolute basis continues to grow. So there's still, that one point that's still wrinkled in the model. But I do expect that margins will begin to expand at least over the next year.
Yeah, and we look at it as well. The one thing that we do not know, Victor, is the ultimate implications and perhaps costs of the European Union's new privacy rules, so-called GDPR. Basically, they're forcing companies to increase their privacy transactions and perhaps their cost as well, Victor. Is that still kind of an unknown around Alphabet?
It is. And they mentioned that on the call that the full impact of GDPR is unknown. It was just implemented towards the end of the quarter. So it still remains to be seen. But based on our checks and the work we've done, we think that GDPR will ultimately be a non-issue for Google and Alphabet overall.
Do you change your recommendation and or your price target based on the results last night, Victor?
Well, I can't discuss, my estimate changes or price target changes, but I do think this is, a very, very good quarter for Alphabet. They continue to benefit from multiple different secular tailwinds: search, video, programmatic, cloud, play, AI, machine learning. Waymo is about to launch a full commercial service later this year. And they also talk about Loon and Wing. Those are two projects that are coming out of somewhat of a beta project status and full commercialization this year or next year. So multiple different tailwinds. I mean, I think the wind is towards Alphabet's back.
There you go. And the market is rewarding it. The stock is up 4% right now to $12.61. Victor Anthony, Aegis Capital. Victor, thank you very much. And by the way, folks, coming up at the end of the show in your RBI, random but interesting, a stat on Google that you've got to hear. All right, more now on the markets and your money. In the bond market, we're not seeing a huge reaction. Again, the benchmark 10-year yield, despite the stock market's record highs for tech, is not above 3%. The 10-year yield at 2.95%. Overseas, something very interesting happening in the Chinese markets last night. Look at Japan. It was up a bit, but check out China. Now, the Chinese markets have been very weak. Many of them are in a bear market, down 20% from their highs. However, look at last night. We saw the Shanghai market and the Shenzhen market in China both rising well over 1%. The Shanghai Composite, which has been weak this year, rebounding a bit, up 1.6%. And in the European markets as well, we are seeing kind of a similar move there, not to the level that we saw in China, but we are seeing green across the board. The Italian market up more than 1%. Germany up 1.4% as well. Outside of stocks, here's a global look at commodities and currencies. Oil, not a big move. We got to watch Iran. We've got Helima Croft coming up in just a minute on the oil situation and the Iran situation. I want you to focus in on gold, because with gold's drop, that is now in a correction, which technically means it is down 10% from its April high. Something to watch. Bitcoin, though, again, the big winner, just like yesterday. Bitcoin up more than 4% right now to 78, 97 per. That's on Coinbase, by the way. All right, let's tie a bow now on all that we have just heard. Joining us now is Matt Maley, equity strategist at Miller Tabak. And Matt, you have argued that the most important stock in the market right now from a technical perspective is Alphabet/Google, and that if it failed, the market could be in trouble. It looks like we could have a very big day for Google/Alphabet today. Would that be good news for the overall market?
It certainly should be. I mean, it's funny because all the other FANG stocks had broken to new highs. In other words, well above their January highs, not just above their January highs, but well above their January highs. Google had not been able to do that. That 1,200 level had been bumping up against it several different times, and each time it pulled back. A couple times it got slightly above it, but it couldn't pull away from it in any kind of meaningful fashion. Now it has. I mean, unless we get some sort of a tricky announcement in the middle of the day today and the stock reverses lower, this is exactly the kind of technical move you want to see. And some of the money that, it'll be interesting to see, though, because some of the money has been flowing into these other FANG stocks as they have made new highs, have been avoiding Google. It might be going into Google and maybe not so much into those other stocks. We'll have to see. But this is definitely a very positive move. I mean, the one concern, of course, is that the rally has been narrow, and just adding one more stock into the FANG issue, but it's definitely a positive move.
I think you read our show rundown ahead of time somehow, Matt, because in the next block, we're going to show and tell our viewers just how maybe narrow and important some of these stocks are. That aside, let's not get ahead of ourselves here. If Google can outperform, will this again be the donkey that pulls the entire market cart?
Well, again, it's hard to say, because when the market gets this narrow, it's never a good sign, at least over a longer term period. And the other thing, of course, is to watch is the semiconductor stocks. A lot of the chips got hurt pretty hard yesterday, and they're lagging. And it's interesting because the SOX semiconductor index has been the other key leader in the technology area away from the FANG stocks ever since the presidential election of 2016. So if these things continue to lag, it could cause some problems. But right now, it's at least for the tech area, this news out of Google is a very positive development.
Okay, so Google is now sort of out of the way, okay, and you were very prescient on that. What is next on your key market radar, Matt?
Well, I mean, away from these the technology stocks, of course, is what's going on in with the trade wars and tariff concerns. And for me, that really falls into the currency markets. I mean, everybody was saying for a long time that, geez, there's only so much China can do. They can't really fight back as much as we can, and they certainly can't in terms of tariffs, but they can in the currency markets. Now we see how what's happened in the yuan versus the dollar. It's seen this major move. They're devaluing their currency, and that's how they're playing the trade war. That's going to be a concern as we move into the further into the second half of the year. So you got to be watching that closely. And the same thing with the yen. Everybody's been talking about how we've been concerned about the Fed tightening, and of course the ECB has tapered back on their QE program. Now there's rumors going around, and then they're sending out messages that they're at least trial balloons that they're going to start tapering back a little bit as well. So if the BOJ does that and we see some strength in the yen, that's going to tell us there's a little less liquidity in the system, and that causes a headwind as well.
But I'll put a different spin, I suppose, on that China story, and they pulled, as we called it, I think a couple weeks ago, the economic bazooka of the currency devaluation in China. Wouldn't that be also in some ways deflationary for the U.S. consumer, and thus maybe can ease back on some of the Fed rate hikes? Because if they cut their currency, or if their currency falls, either way, things in America, all that stuff we buy, that the president doesn't like gets cheaper.
And that's positive. The one thing we got to look for is that, you know, the whole tax thing, when he cut the taxes, it's very, very different than any other president that I'm aware of has ever done, at least in modern times, because they always come out with these kind of programs, especially in their first term, that are back-end loaded, so it'll look real good for the next time they come up for re-election. Trump, on the other hand, front-end loaded everything. And so it's, you know, as that kind of, we work through that this year and into early next year, how much more is that going to play out? And we're seeing a slowing in you know, a lot of the economy, a lot of the global economy, whether it be in China or in Europe. What happens was, as the Fed is tightening, and we have this, the effects of the tax cut start to pull away. That could cause some problems. So my big concern is that we're not only, you talked about Google pulling the whole market higher. Well, the U.S. is pulling the whole global economy, keeping that up. If that starts to fade, we have some problems. That will cause the Fed to ease back. The problem is, I believe that the Fed is just as much market sensitive as they are data dependent. And so, if one of the major reasons that they'll pull back on their tightening cycle is because the markets are coming down, not because the economy is.
We'll see if they're POTUS dependent as well, with the president's comments about the Federal Reserve as well. We'll see. That's another sort of factor that gets thrown in. Matt Maley, Miller Tabak, we'll let you enjoy your day. It's just starting, I hope. Matt, thank you.
Hey, thank you.
All right, time for this morning's top money stories as well. Leslie Picker is here now with those. Leslie.
Hi, good morning, Brian. Your big individual stock stories right now include UBS. Second quarter net profit beating forecasts helped by its investment bank, although the company's wealth management business just missed consensus. As for the third quarter, UBS says market volatility remains muted, which is less favorable to client activity. Shares of Whirlpool are down sharply. The appliance maker reporting a surprise second quarter loss. Whirlpool also cutting full year economic outlook. The washing machine maker citing poor performance in Europe. Whirlpool also saying U.S. steel tariffs are driving prices higher for consumers. TD Ameritrade's third quarter earnings and revenue beat forecasts as trading volume, commissions, and transaction fees jumped. The online broker says results were helped by its acquisition of rival Scottrade. Brian.
Leslie Picker, we'll see you in just a few minutes. Thank you. All right, we are just getting started here on Worldwide Exchange. It's only 5:12 in the morning after all, and on deck, Silicon Valley or Pamplona, Spain. How the herd mentality in tech, we just talked about it, could be a big risk to your money. We'll show you numbers around why we're saying this. And speaking of tech, is one of America's most prominent senators calling for more antitrust action in Silicon Valley? What Elizabeth Warren told CNBC that is sure to get a lot of attention this morning. Stick around.